XYZ itself moved up about 17%. It ended at 17%, up about 9 points today. So this is Block Inc. And I know you've all seen the news, and they had a good earnings report, but at the same time, they're reducing about 40% of their staff and replacing it with AI. So Block is involved with the AI, the tech industry, and everything else. I don't want to say Squarespace, but doing some of the billing and everything, the online billing when you go to restaurants and everything like that. That's what they're still involved in, and other things. But they're cutting 40% of their workforce, and with the blowout earnings and with that they had moved up. Now, what Ernie decided to do is he just let it go. You can move back here. I'm going back to RadioActiveTrading.com. We're going to go to Blueprint and Fusion. And what Ernie decided to do, click back. There we go. And what Ernie decided to do on his positions is he sold a call, of course, today. And after following various trades, he's been in this position for a while. He sold the 65 call for $1.28. He went out of the money. And this was right after the earnings, probably about 10, 11 o'clock this morning. And of course, as we see, the stock continued up to 63.70, ended there. So he's in a good position, sold that call. It's a 7-day out trade. I'm sorry, I didn't mention that. It's a 7-day out trade. It's for the 6th of March, 65 strike. And the stock's at 63.70 right now. So he's looking for some quick decay on that after the big earnings move. And of course, a bulletproof position, meaning what? Negative at risk here of 4.9%, meaning even if the stock falls below his put strike price, which is very far down in price, he's holding the 70 put, it looks like. Okay, so he'd been in it for a while. He's holding the 70 put. So he's guaranteed to make 5% on the position in the worst case scenario. And I had a similar situation earlier this week with one of my positions, and that was the AGI position. And AGI, the gold, of course, gold is moving up. AI stocks are moving up, and AI stocks that are apparently cutting their workforce are moving up too. And we can talk about different thoughts there on how the economy is going to be affected as AI replaces that. You've seen a lot of talk about that. I know you guys have. You've seen it about how AI may result in a 10, 11, 12% reduction in the white-collar workforce or the workforce in general, and how that could actually affect the economy negatively, where everyone else is saying it's going to affect the economy positively. So there's a lot of different thoughts on that. But in this case here, AGI had jumped up from their earnings a little bit, and we took a chance and we just created something that I always like to see. But let's go ahead and go to the stock chart, take a look at it real quick. And in this case, with the earnings on AGI, there we go. Just in the past, I wanted to go this way, sorry folks. Just in the past few days, we had that positive MACD crossover, and then it started to go a little bit drifty, and then the earnings came out. When it crossed this range at 48.49, I could have liquidated the radioactive trading married put position on AGI for about a 27% gain in that case. What I decided to do instead is I'm holding the March put, and it was bulletproof, to about 11%. So what I decided to do instead, should I liquidate at 28% or should I take the chance? And when the stock was at about 49.50, 48.50, no, it was 49.50, I apologize. We just sold the at the money 50 strike call for March for 310. And that's the same expiration as our March put. So what I have now is a guaranteed 16% profit. I could have taken 23, 24% when I made this on the 24th. But we decided to sell this call that puts us to 16.4% and increased our maximum profit up to 32.3% if we're assigned at 50. So it was a little bit of a chance there. It was a little bit of, do I want to take the profit now? And it wasn't, 11% was the worst case scenario. Remember, if it was below 44, which we're way above that. But at the $48.50, $49 level, we would have had a profit of around 28, 27%. We sent that to our Blueprint owners. So that's the position that we were in. And I had a choice. Do I close now? Do I move the put up and add more cost to it? Or since we're already bulletproof in double digits, why not just sell the at the money 50 strike call for 310? Now, of course, any of you have heard me say, especially those of you that are in the Fusion subscription, hey, if I'm selling a call right now against a married put position, normally that means you should probably buy a call, because what happened, of course, AGI, the gold is back up 54.19. It continued to move up in price. We're probably going to get assigned, but there's the 36.6% return. If we're assigned, we're in a bulletproof collar. As I mentioned to our Fusion subscribers at RadioActive Trading, the game plan was if it stays above this, I'm not going to roll it. I am not going to adjust it. I am not going to re-bracket the collar and move it up for April or for May. I'm just going to let it get assigned, take the 36.6% return, succeeded expectations. You see the maximum risk. Now we've bulletproofed the position. The worst case scenario is 20.2%. If gold's had one of those fluxes again, where it drops down and collapses even down to 40, which I don't think would even be possible, but if it did, we've seen some big drops in gold as the market fluctuates. Well, that's okay. All right, so I'm still making 20.2%, just 3 or 4% less than when I would have liquidated. And if it's in between, if AGI pulls back, the metals pull back, gold and silver pulls back, it falls below 50 and above 44, then yes, I will enter another collar. Probably sell another 50 call for April, buy a 44 or 45 put there, get another net credit, increase the bulletproof status, and increase the maximum return. But we'll see what happens. So right now, that's where we are. Decided not to liquidate, decided to just get this last little bit, turning it into a standard collar from that bulletproof married put position. And now as we move forward, we may continue it as a standard collar, just let it be assigned. And if it falls down here, I may re-bracket it as well. If it falls down to 43, I may re-bracket this, and we'd still be in a bulletproof status, guaranteed profit of double digits, and still probably around a 28, 29% return above where I could have liquidated the other day. Just let's say the stock's at 43. So maybe sell a 45 call, maybe buy a 40 put. We'd still be 10 or 11% bulletproof, and we still have about a 29, probably closer to a 26, 25% profit above where I was if I liquidated at that 23, 24%, 25% level, just closing the position. So, what are we talking about here? Why am I going all through this? Well, these are some of the ideas, what Ernie did with his portfolio and what I did with my AGI position. That's what's shown for you in the portfolio tools as you're tracking and managing positions. So you can set up a portfolio and you can enter your positions, and we track them as linked positions rather than on your broker where it's just, you have a long stock, you have a sold call. And then somewhere down here you have a long put, or you have different versions of it. They're not linked together. We show you the full profit and loss, initial expected profit and loss, liquidation value, and current expiration value in the stock analysis view as a linked position. Whether you're doing multi-leg strategies, credit spreads, debit spreads, iron condors, iron butterflies, married puts, or as soon as I sell a call against the married put, I've got a long collar position. I've got my original expected gain or loss. I've got my current liquidation value, pretty much close, and my future expiration. And that's based on if the stock stays at the same price between now and expiration as well. Now, I know my other three positions aren't looking so pretty, but I've got management ideas for all of these. And how do I get those management ideas? How do I decide to work the numbers quickly within 5 or 10 minutes or so? How did Ernie decide to work the numbers quickly with 5 or 10 minutes or so on his XYZ position? Is as I'm tracking any married put, any covered call, any credit spread, any iron condor in the portfolio, I can go to position actions and I can go to position analysis. The position analysis gives you a breakdown of your current position, where you stand right now. You know, if it was a credit spread, the maximum risk, of course, would be the net debit minus the difference in strike prices. The positive return or maximum return, that would show if I had sold a call. I don't see a maximum return here on the married put because it's unlimited. And as I mentioned, you see the current liquidation value here, the breakdown, and then the future expiration value. Now, Kraft doesn't have one for me. But what we decided to do with Kraft, I think it was next week's expiration, if I'm not mistaken, with the NASDAQ at 24.61 after moving back up. So it's the March 6th expiration. We've got the 25 calls sold, and we sold it for about 22 cents, if I'm not mistaken. Now, this doesn't look great on a profit and loss chart. I'm going to explain why. But so we take this down to a positive return of 9.2%, where the current liquidation value is around 10%. I don't think that's actually right. Let's go back to RadioActive Trading. Let's go back to our open trades. The Kraft Heinz position, maximum risk. Yeah, it's only 5.1% is the maximum risk. But we sold that 25 straight call for 30 cents on this position. And we're doing that because our put is so far, there we go, KHC custom spread, I'm sorry, so it's 30 cents, not 22. My apologies, folks. It doesn't look like a great position. But remember, the original cost basis was $26.82. It's down almost 20%. And so, yeah, the maximum risk is still 12%. This doesn't look like a good return at all. The max profit on the position, in my best case scenario, if Kraft is, if Kraft is at 25, folks, is a loss of about 5%. There's something not contained. I think it's the dividend payment that we received on Kraft last quarter. But in any case, why would I do this? Well, it's because it's defensive now. I've got the 25 put to April, sold the March 25 call. Am I going to be able to make up what we really saw is 5.6%? But I'm going to make up 5.6% on Kraft in the next 42 days after this expiration? I don't know. But we're going to continue to sell weekly calls at the 25, 50 range. We're going to knock this down. We're going to take a stock that is potentially down 20% to only a loss, hopefully, with my expectations, of only 1 or 2%, or a break even, and I'll take that every day as you will, as well. I understand. All right, so those are just some of the movements we've done, some of the things that we look at, some of the things that we do following the rules in the blueprint for the married put approach. 13 different income methods, not just about the proper structure of controlling risk to single digits, going out in time, following the 3 core principles which really exist for any options trade in the blueprint is the whens and whys and hows I would sell a call. I do the riskless spread trade or the money net trades of income method number 6 and income method number 5. That income method number 1 that Ernie showed was my plan for AGI, was selling the call at that 50 strike. The best idea. Should I have done an income method number 6? Maybe. But all I wanted to do is for the next 20 to 25 days is increase the profit from my liquidation value, which was around 29, 28%, up to that 34, 36% that you saw with just selling a call. And now it's above it. I'm more than happy with that. I don't have to adjust the put, and I have plans. And I just love seeing it. I used to do this before I even found RadioActive Trading. I used to just trade standard collars 1 month out at a time and just re-bracket, readjust the trades, and get a position to a bulletproof status in a stock where if I get assigned, hey, I'm making this amount, but even if the stock collapses, I'm still making double digits. Now, it would take 5 or 6, 8 or 9 months to do that with standard collar approach. But when we first partnered up with Kurt Frankenberg, he showed me, he's like, okay, 50% of your portfolio, Mike's in these standard collars. You've moved away from covered calls. You've moved away from cash secured puts. I like that. But let me show you a better way. Show me your last 10 trades, and I'll show you how you could have profited more by opening them initially as a married put position, letting the stock grow, and not worried about the movement and the adjustment and the rolling that you're doing with your standard collar positions. As I mentioned, that was back in 2008. Since that time period, mid-2008, and that's when I moved 50 to 55% of my portfolio into the married put positions to leave the upside open and still use the income methods on a shorter term basis, following the 3 core principles and following the guidelines for each income method, whether the stock moves up, stock stagnates, or the stock moves down. Of course, that's all available in the blueprint as well.